All right, welcome everybody to the Q2 earnings call. If we can just get to share screen, which I forgot to do last time. All right, I am sharing screen. Everyone can see that?
Yeah.
All right, let's get going. Thank you everyone for showing up on time. It is 9 a.m. Mauritius time, which is inconvenient for many of our shareholders. Um, we'll start with this reminder. Oh, excuse me. I haven't used my voice yet today. All right, we'll start with this reminder that we start with every time. So Africa Eats is here not just to make money. Africa Eats exists to lower hunger and poverty. And we do that by investing in fast-growing, profitable companies. We call them Bizi. We'll use that term a lot here. So there are investees, and we are an investor and all that, but they are also part of the whole, and so we needed a name for that. So we call that Bizi, inspired by Mbizi, a Shona word for elephants. Um, and those Bizi, they're building the food and ag supply chain across Africa. That is their sector that they work in. Share price is up. So we'll go over a few things today, just in top line general things, and then we'll go through the financials and talk about the future. And so here we are at the present, and the present is $2.55. We are a publicly listed company, if you missed that news. And so here's the share price. We listed on this day back in December at $2.25. We are up 13 and a third percent since then. The reason it has flatlined, well, one reason why it flew up is because we hadn't repriced the shares for most of 2024. And so the price that we listed at was basically the early price of the year. And so most of this bump up is just following the fundamentals. And then we declared a private placement at the beginning of the year in Q1. We declared it at $2.50. And so the share price stuck at $2.50. And then we declared in the last earnings call a quarter ago a second private placement, and we only bumped it up to 252. And the share price did exceed that slightly to 255. And then you will see an announcement tomorrow that we are canceling it. And so the reason why this one fizzled out is that it was related to this project we're doing in Nairobi, which I'll talk about later, called the AGRI ETF. And it was supposed to be back in April. We thought it would be live about now, or September at the latest. And now it's expected in Q4 at the earliest and Q1 at the latest. And so we just don't need that private placement open right now. We're canceling it and letting the share price again follow the fundamentals. We'll explain the fundamentals through this call. All right, the bigger news in Q2 was we had the 2025 annual gathering. So every year we fly our Bizi founders to Nairobi. And just be clear, we fly our Bizi founders and their trusted number twos, whether that's a co-founder or a hire. We fly them to Nairobi. This year we spent 3 days with them. In previous years we spent two. We had 30 founders in the room. There aren't 30 founders in Africa Eats. There's 20 something. We invited hand-selected some Kenyan founders to be in the room as well for a variety of reasons. We had 50 guests on day one. That was up from the previous year. And this year we had them for the whole day. Last year we only invited them for the first half of the day. And then we did our first ever live Berkshire Hathaway-esque Q&A, which I'm still really pleased about. That went really well and that was really fun. We'll do that every year. And then day three, the new day, was a little day of business school. We had a trainer come in and basically teach a lesson for business school. And that was really well received. The Beezy said that they wished we had done that for more days. So we'll look at that for next year. And in terms of what this event is, some of the people on this call were there. I recognize the names. Day one of that event was the Q&A and the earnings call, but most of the day was an unconference. And if you've never been to an unconference, it's a conference, but the topics are not picked ahead of time. So the agenda is pick topic, have discussions. And so the first breakout of the unconference was having the guests suggest what topics they wanted to talk about. And then the Bizi voted on which of those topics that were actually going to get talked about. And then they divided up into smaller groups. And these are literally pictures of those groups. And they had an hour to talk about that topic. And then we had lunch and networking. And then we did the opposite. The Bizi suggested the topics that they wanted to talk about, with the known guests in the room. And then the guests picked which topics that they wanted to talk about. And they split up for an hour and talked about it. And then day two, we did some of that without the guests around, and that was more of the Bizi bringing forth their challenges and solving them themselves. And then a mix of also group trainings. There's a picture on the left of me doing something and Jumaane doing something in terms of trainings. And then simultaneous with that, actually throughout the 3 days, we had select guests have one-on-ones with our companies. So that was Rogers Capital having one-on-one conversations with companies that could use a parent co in Mauritius. That was Perezium Capital having one-on-ones with companies in the queue to go public, and assorted other guests that we'll talk about some other time. And this is one of the secrets. And I put secrets in quotes because we published it in a book. Like we don't keep it secret, but there's no other word I know to describe this. This is one of the things that makes Africa Eats different and successful. It's that network effect that's created by having entrepreneurs in rooms with entrepreneurs in person once a year so that they know each other and trust each other, and then online the rest of the year. And in those, uh, we spend most of our time talking about problems versus, if you think about the conferences you've attended, usually they'll have a panel discussion with some people who they consider success stories, sharing those success stories. And I guess that's for inspiration and teaching and so forth. But what's missing from most conferences are the failures and the challenges and the issues and the things that get in the way of growth and in the way of success. And I'd say our event is by far the other direction. We spend most of our time talking about challenges and issues and failures in order to help everybody get past them. And we do that in an open way where people trust each other. Um, and we will continue doing that because it works really well. And we continue to advocate that other investors do it and they don't understand. I think you have to experience it to believe it. All right, so we are end of Q2 is halfway through the year. And so we do collect data from all these BZ once a quarter. One thing to note is that we publish our quarterly results 21 days at the end of the quarter, and not all the BZ have their numbers by 15 days after the end of the quarter when we kind of finalize the numbers. That's too fast to actually collect all the data for that quarter from the BZ. So we tend to lag a little bit, but not these six. These are six of our largest companies. They provided their Q2 numbers by the time we published, and all but one were up. And so East Africa Foods up to 18 million, and this is trailing 12 months revenues. TRUK has surpassed 10 million, and just some highlights here. So East Africa Foods had their first quarter with $5 million of revenues, 5 million and change. That's a new milestone, not just for them, but for all the BZ. That's a big, when we first started Africa Eats, the previous year was 6.8 million for all the BZ combined. And so we're inching toward that day when East Africa Foods has a quarter that's bigger than the entire portfolio behind. And then TRUK will follow suit, and some of the others will get there eventually. TRUK finally passed up 10 million. They were 8 million for last year. They were 124,000 in year one, not too long ago. 134,000. PMP went public last year talking about 1.8 million, and they're 2.7 at the moment in terms of run rate. And the other, again, most of the others are up. And so from that, what we do now is we do a mark to market given the data we have. So historically, when we were a private company, we did the mark to market once a year. We would collect the annual data, And February or March, when we had all or most of that, we would do a mark to market of our portfolio, right? The fair value analysis of the portfolio, and we would publish that in the annual numbers. And now that we're public, what we do is we do that every quarter with whatever data we have 15 days after the end of the quarter. So it, again, mostly lags an entire quarter. And so I'd say it's an underestimate of the actual value. If we were to get everything, get all the ducks in a row, get all the data in the room, do all the analysis, the numbers would be higher. And we're fine. Companies like ours tend to trade on a discount. Our discount's based into the timeline for collecting data rather than the price, the share price. Okay, and so here's the balance sheet as of the end of June, as the end of Q2. And the highlight is at the top here. So we are an investment company, which means the value of this company is driven by our balance sheet, not our cash flow statement, not our income statement. And the double asterisk just it describes what I just described, that it lags behind. And so we now surpassed the $30 million of assets. Even when you subtract out the liabilities, we're past $30 million of assets. And that's a big milestone because when we started the company, right, we're not a fund, never been a fund, never want to be a fund. We started Africa Eats as a spinoff of Fledge, and we moved $3 million of assets from Fledge and my family office into Africa Eats. So on month 2 of Africa Eats, it had a balance sheet of $3 million and a little bit, not even 3.1. And here we are, 5 years later, minus 10 days. The start date was July 10th, 2020. So we'll round that up to 5 years. In 5 years, we grew the balance sheet by tenfold. And we did that in part by raising capital. We did raise $11 million of capital in that time. But we did two-thirds of that by growing the Bizi. And so that is, to me, quite an impressive feat. I'm quite pleased with that. I'm not promising we can do that again at that scale, but we're trying to keep up with that. Moving down the balance sheet, our liabilities continue to dwindle. Again, to repeat how we created these liabilities, we have always been short of capital. The Bizi always have more asks than we have money in the bank. It's been true from the first day. It's still true today. And so at times, while we were a private company, we used to send out email to our investors saying, hey, Swahili Honey has an invoice financing. We can't afford it. Can you fill in the gap? East Africa Foods needs some operational capital. Golden Pot needs a truck. We would just literally, I would just write it up as an email, send it out to the shareholders, and more often than not, they provided some subset of them provided the cash. And at times, when we said we were going to do a loan to the Bizi, the shareholder said, "Well, I'll lend you the money. You can on lend it to the Bizi." So we peaked at about 1 million something of liabilities like that, and it's been dwindling down as we pay them off. They have maturity dates. We get repaid by the Bizi. We repay the the shareholder. And some of these are for trucks, and they were 3 years old. So this will continue dwindling down in the next few years. All right, and that's it for the balance sheet. Like we as management watch that top number on fair market value, and then we make sure that those liabilities get paid. And that's about it. Over on the income statement, it's mostly driven from that balance sheet. So again, we get to the 2 stars at the top. That 2 asterisks means the same thing. It's the increase in the fair market value. And so we're up $3.3 million, or almost $3.4 million for the quarter. Then there's some other income that showed up. We also, of course, watch our expenses. Expenses were pretty small. It's, as you can see here, it's people, and then operations is that annual gathering, right? We do spend money to do that. We believe the value gained by the Bizi more than pay for that. So you can think of that as we're an investment company, and sometimes we make investments by spending money on our expense sheet off our P&L. We spend your money as shareholders doing things like the annual gathering, because it ultimately increases the size of that balance sheet as those companies grow faster from that knowledge. And that's it. And it boils down to that. And so far to date, that's been true. That's how we did a 10x growth in 5 years, by sometimes spending money in that form. And then you can see that people is the next biggest charge. There's still just three full-time people plus two almost full-time helpers. We'll add them to the team at some point. Um, and then a few other things. And then on the bottom, the profits then drive from that fair market value. So I just want to repeat, this is not cash. We did not receive $3 million of cash. We do not have $3 million more of cash in our bank account. This is just how the IFRS standards work for an investment company. Do note that halfway through the year, we're 45% through the profits of last year. And that sounds like we're lagging, but we're not. Because what was not quite visible as a private company, both to us and to everyone else, is we're really seasonal. Um, and it's a little subtle on why we're a seasonal business, even though we're investors. It's not that we're seasonally investing. It's that most of the Bizi buy food that's grown from farmers or sell seeds or animal medicines to farmers. And the plant is Q1's the planting season. So there are two planting seasons in East Africa. There are three planting seasons in most of West Africa. And Q1's a planting season. And so there's a lot less revenue in Q1 than in Q2, Q3, Q4, to the point where this is why I didn't say every company was bigger in Q1. Q1 sometimes down. So often Q4 is the Q3, Q4 is the big quarter of the year, and then Q2 is lower in terms of quarterly revenues. And then by the time we get back to Q4, the company's grown 50, 100%. The Bizi has grown 50, 100%. So this reflects into our balance sheet and our income statement because that balance sheet line is driven by the revenues and the profits of the Bizi. And so if Q1 is flat or down, it doesn't grow very much. So if you go back to, I don't have it in front of me here, but if you go back to the Q1 report, I think the fair market increase was a few $100,000. It wasn't even $1 million. And so combined now between the two, just to be clear, yeah, combined it's 3.1 million. No, sorry, it's 3.1 million just for Q2, and then add in the bit for Q1, and we're past halfway. But Q3 and Q4 will be higher, or they have historically been far higher, and all indications are they'll be higher again this year. So we do expect the profits to be higher. And then we get to the cash flow statement. Again, two asterisks at the top in terms of profit before tax. Again, that's fair market value. You can see that here. IFRS standards make some of these numbers negative. That's not down, that's up, but it's a cash flow statement, so that's the way it works. If we go down further, we are an investment company. We put out investments. So we put out only $140,000 of investments. We got some paid back. We put $110,000 net to work last quarter, which is pretty slow for us. And then we did close that first private placement that I talked about way earlier. So that was closed at the end of Q1. The money showed up in Q2. And so we had 825,000 new dollars show up, and then some other mix of monies, and so we were up in terms of cash. All right, we'll take questions at the end on this and everything else, which gets to the share price. So ultimately, the idea, the theory is that we have fundamentals that go up or down, but so far have always gone up, and the share price should follow. That's the general theory of a stock exchange, is that the investors should value the company at whatever its fundamentals say. So far, that's been true. The only difference is that we announced like Q2 results, 21 days after the end of the quarter. It's not the next day when the share price pops up. It's over the next quarter when it catches back up. So at the end of Q2, we were 250, or sorry, the beginning of Q2, we were 250. At the end of Q2, we were only at 252. It didn't move because we had that open private placement that we announced at the Q2 earnings call. Sorry, Q1 earnings call. Um, and so that kind of put a cap on the share price. That and again, Q1, the numbers weren't a big pop, and so 252 was what the report said we were worth. Um, Meanwhile, we took this page again. This was in the annual report. This got updated in the Q2 report with some tweaks. It's a style of report that comes straight from the Berkshire Hathaway annual report. Warren's been doing this style. Actually, before he even took over Berkshire Hathaway, he had a style like this. He put in his annual letters. The difference in the Q2 version of this is we normalized it to July because, again, the first day we incorporated July 10th, 2020. Um, and we wanted to just do this analysis just to see what the difference was. And so the S&P 500, those are reported in annual calendar years. This is reported in July to July. And the difference here is this number right here, which I'll highlight, 26%. So in the earnings call for the annual report, we reported our 5-year compounded growth rate at 22.5%, which was true through 4.5 years. It was true through the share price on December 31st last year. But when you actually do the actual 5-year calculation from July to July, or from July to June 30th, 2025, share price went to 252 instead of 225, and so that's actually a compounded growth rate of 26%, which is better. And so our internal benchmark is 26%. Our goal is to continue having your shares grow in value by 26% per year, which is, just to be clear, an outrageously high compounded growth rate for share prices. Berkshire Hathaway is outrageous as well. There's this 19.1. And so it just happens to be, sorry, 19.9, I think it is. 19%, just shy of 20, for 60 years, which is how they got so big. And so if we can beat Berkshire Hathaway, we're happy, but so far we're at 26%. And so that is this growth rate to 2020, which isn't shown here, but we're at 13.3% so far in the half year. So that's a good sign that if we did 13% in half a year, if we can repeat that for the second half of the year, we'll hit that 26%. The fundamentals in this set of reports, so you just take the enterprise value, so that's the full asset value of the balance sheet minus those liabilities. So that comes out to 31.9 million. We have 13.4 million shares, the exact number sitting on here. You just divide the two, value divided by shares, and you get an enterprise value of $2.80. And we traded yesterday at 255. So if we could get to $2.80, or when we get to $2.80, that would be a 24% gain. So that's not quite the 26. 26 requires us to get to $2.83. So we have 2 more quarters to grow these fundamentals to merit $2.83. And that would be a share price increase of 30 cents from where we are today. We are already up 28 cents for the year to date. Seems doable. So no promises. We can't promise where the share price will be, but fundamentals say that we should be able to hit that 26% growth rate. All right, and part of what's driving that, part of what drives the share price up for Africa Eats is that it is a liquid company, liquid shares. And we've said this before, and it seems like not every shareholder understands what we mean by liquid. Certainly not every potential investor who hasn't written the check yet doesn't understand what we mean by liquid. And so we included a page description in the Q2 report on what we mean by liquid. And I included in here some slides from a Tuesday market event in Nairobi where we taught the Nairobi financial markets what we mean by liquid. We did a similar event in Mauritius in April as well. Similar slides. And just to be clear, this is liquidity provided by Tuesday Markets. And Tuesday Markets is not Africa Eats. Tuesday Markets is a separate company. It's also domiciled in Mauritius, also managed by the team of Africa Eats. Um, Funded completely separately, different mandate, has nothing to do with food and ag. Its mandate is to go make markets liquid in Africa. That's what its funder wants us to do. That's what we're doing. And it does it for Elite Meat, Africa Eats, and Zoeto at the moment. It will do more later this year. So what does liquidity mean? Well, Tuesday Markets is a registered market maker in the Stock Exchange of Mauritius. It's not a broker. It's a registered market maker. It's the first registered market maker in Mauritius, but not the only one now. It follows the same basic principles as the market makers in New York and London and Europe and the other major markets. And its primary tool is this. It places a buy order and a sell order for each of those three shares, each of those three companies. And typically for Africa Eats, that's 50,000 shares. So that's 100 and something thousand dollars worth of shares. And so the buy order is placed and its GTC is good till canceled. So it calls up its broker, and we use WhatsApp. We WhatsApp the broker, and we say, place a buy order of 50,000 shares of Africa Eats at, this is a little dated, 253. I think it's 255 now. And place a sell order for Africa Eats, 50,000 shares, $2.50 something cents now. I think it's 258, 257, something like that. And keep that order on the market until we cancel it. And every week we review this and change the price depending on the trades that happened. And so anybody can call up the broker in Mauritius, whether they use Tuesday Markets as the app or not. You can call up your broker and you can say, I would like to buy or sell Africa Eats against these orders if you want. These are published orders. They're sitting on the stock exchange. People do this. I wake up in the morning and there is an order, what is called a contract note in my inbox as a Tuesday market manager. And it tells me, 100 shares, 1,000 shares, 5,000 shares, 25,000 shares have traded. And we do this without a single human being working in Mauritius watching the trading page. There's a similar order for Zoeto. There's a similar pair of orders for Zoeto. There's a similar pair of orders for Elite Meat. Their share prices are up as well. And that's it. That's the major tool. The other tool is the app, collecting orders once a week, putting them up on the market. But again, that trades against these standing orders and trading against each other. And so how can Tuesday Markets do that? It has two tools in its disposal, and just basically two tools. It has a large amount of cash. The investor who provided the cash to Tuesday Markets loves markets, wants to see them liquid, and has provided plenty of cash to do this business. So we can fill that 50,000 order many days straight if need be. Like don't press us on that. And when Tuesday buys shares of Elite Eats or Zoeto, it has an inventory of shares. It owns shares in each company because people do buy shares against these orders as well. People hear about one of these three companies or all three, they place an order to buy shares from Tuesday Markets. Tuesday Markets has shares to sell. That's part of its job. It has to have shares to sell. As a registered market maker, it has to buy shares and it has to sell shares at a reasonable price. Okay, so why does it do this? Like this is not a philanthropic project. This is a for-profit company. The funder of Tuesday Markets is not a philanthropist in any way, shape, or form. He is a for-profit capitalist. So this company does what it does because it makes money. It's a profitable company, and it currently has a paper profit. It's not realized yet, but it has a paper profit on all three companies. Nice profit, in fact. And it works really well. It's buy at one price, sell at a higher price, repeat as often as possible, make money. That is the business of a market maker. My research of market making in New York has found not a single market maker in the last 100 years has ever gone bankrupt. All of them make money. So Tuesday Markets is hopefully going to follow suit. And so this works when prices don't move. If the share price stays flat, that buy price is lower than the sell price. And as long as there's some trading, then the market maker makes some money, right? The market maker it chooses how big to make that spread, as it's called. And as long as it covers the fees involved in trading, which then there are fees involved in trading in Mauritius, as long as it covers those fees, if the stock price doesn't move up or down, besides those two prices, market maker makes money. Uh, the fundamental idea of why Tuesday makes a market for these three companies is it expects the prices to go up. Well, then this business model works much better because Tuesday Markets has bought shares back at the listing prices of 225, 165, and 180, and all three are up. So anytime it sells shares to anybody who finds out about these companies, Tuesday makes money. So when it goes up, it's easy to make money. And I'm sure at some point the prices will go down, and then the market maker has to just be patient. And, what the market maker can do is lower the number of shares that it offers the market. So instead of 50,000 shares, it could put out a standing order for 1,000 shares or 5,000 shares or 10,000 shares, and just have a sell a lot fewer shares at a loss and expect that the share price will turn around at some point. And so that's it. And in terms of liquidity, it's as simple as that. There is a company that exists to buy and sell shares because it's a profitable business to buy and sell shares. And so because of that, Elite Meat, Zueto Holdings, and Africa Eats are three liquid companies on the stock exchange that isn't known for liquidity. So if you're interested in buying shares or selling shares, you can do that 5 days a week. Okay, three quick things looking forward. So again, forward-looking statements, uh, we need to warn about that as a public company. These things may not happen, blah, 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 blah. All right, so first one is TRUK is in the process of listing. So we're going through all the normal stuff we did with the other three companies. We're going through all that right now with TRUK. We have been for a few months. It takes months to get through all that. So we'll get through this at some point. We'll announce a date when we know a date for actually listing. TRUK itself is up. It was 8 million in revenue in 2024. First half of the year that's grown to 10 million. Right, so trailing 4 quarters is 10 million now. It's on track. It'll probably do 12 million this year. I think that's the projection. So, you know, some growth, not a huge burst of growth this year. It's raising capital in this listing process to have that next bump up of growth. They have 22 trucks and 12 cold rooms. It's a much bigger business than it was just a few years ago. This is a company that got started in the middle of 2020, only did a less than 200,000 in revenue in 2020, and again, is 10 million trailing. So it's grown really fast. Here's that growth spurt so far. And this is kind of, big growth spurt. Take a breather because it's hard to do this. Um, and we'll get up to maybe 12 this year or so. And then the projected numbers go much quicker. And we're still iterating that. So this is still a draft. Their goal is to raise $5 million. Here's the use of funds. It's in expanding the fleet, more refrigerated trucks, adding some non-refrigerated trucks because there's some demand there as well. Um, and then the sugar is just to fill the trucks on the way back from the ports because timing wise, it's not always possible to get an order from Dar es Salaam or from Mombasa back to Kigali without the truck having to sit around. So we now fill them up with sugar on the way back, Mauritian sugar at that. And if you're interested in knowing more about this, here's the contact information for Hervé Touchemi, the founder CEO of this company, who, by the way, is also the founder CEO of Elite Meat. So he's built two amazing companies so far, and is doing great. One of our rock stars, as we said. I mentioned the ETF at the beginning of this talk. So quick update on that, and a little bit more information on what we mean by ETF. So specifically, this is a project of Tuesday Markets. I bring it up here on this earnings call because the primary instrument that will be inside the ETF is Africa Eats, along with Elite Meat and Zueto Holdings, and then TRUK if it gets big enough, and more Bizi in time. So it's related. It's part of the greater Africa Eats story, but it is technically a project of Tuesday Markets. Tuesday's paying the bill on this one. It's called the Agri ETF. The theme is agriculture. The all the constituent investments from the fund will be fast-growing, profitable SMEs in the agriculture space in Africa. To start with, it'll be Bizi because that's all there is in terms of publicly listed companies. If we can find as Tuesday Markets, if anybody else lists that's an agriculture company that's not part of Africa Eats, they're still eligible to be part of this ETF. And do note, this is not a Mauritian exercise. This is a Nairobi exercise. This is a Kenyan project. So this was a request from the Nairobi Securities Exchange on what they wanted to do in terms of the capital market, at least first. So we're working on this first with them. And so we view this as the Africates management team as one next step to unlock the capital markets to provide capital for African SMEs. And there's a trend in the world, if you're unaware, if you're not invested in the stock market, this might be news to you. But in the United States, there are more ETFs than individual companies now. In Europe, there are more ETFs than individual companies now. In London, it's running really close. They haven't crossed that threshold yet, but it's close. Um, and even in Johannesburg, there's like 99 ETFs now. In Kenya, there are just two, and one of them launched in Q2. So there was just one before that. There's only a gold fund and an MCSI World Index Fund, so a big public company fund. There is no ETF for Kenyan companies that includes any Kenyan companies. There's no ETF that includes African SMEs. So this will be the first of those in Kenya or anywhere in Africa. And so what is it? Like what is it? So it stands for Exchange Traded Fund, but like legally, what is it? This is a question we didn't know this answer until January, February this year. In Kenya, it's a trust. So a legal team sets up a trust with a trustee. Trustee will be a bank. Um, and then there's a fund manager and a market maker associated with it. And technically, that won't be Tuesday Markets because it's not a Kenyan company, and the regulators want that to be a Kenyan company. So we'll be a partner in Kenya that is the legal fund manager and market maker, partnered with Tuesday Markets to do the work. And then the trustee will be NCBA Bank, the third largest bank in Kenya. And then we're working with a promoter to sell this, or a bunch of promoters. That's what a ETF looks like in general. But this ETF includes shares that are listed in Mauritius. So it gets slightly more complicated because there needs to be a custodian in Mauritius that holds these shares. That will be MCB, the largest bank in Mauritius, and brokerage in Mauritius. And so it will technically hold those shares on behalf of a Kenyan bank with a fund, with a trust that's managed by a Kenyan brokerage house along with Tuesday Markets. And then in time, we will be adding Kenyan listed companies to this ETF. So there'll be a Kenyan custodian with Kenyan shares. And in time, again, we'll very likely have listed shares in Rwanda, in Dar es Salaam, in Lagos, in Accra, probably Johannesburg at some point. And so there'll be lots of custodians uh, who hold shares in whatever their local stock market is. And then just to be clear, I don't think I have a slide for that one. Yeah. The idea is that we get this up and running in Kenya first, and then we cross-list the ETF on all the other stock exchanges across Africa in time, not in 2025, but in time we spread this around. And that's a lot less work than trying to cross-list Africa Eats in 15 different stock exchanges. And it makes a lot more sense than trying to take a Rwandan company, Elite Meat, PMP, and list it in Lagos. There's no Rwandan companies listed in Lagos. There's no, this is the only Malawi company listed outside of Malawi. That's just not done right now. But a fund being cross-listed, that is being done. There's that gold fund is listed in a lot of different stock exchanges. Again, ETFs are a more and more common thing to do. So this will get more complicated in time, but it will also be simpler for investors in Africa to buy in. And eventually we'll bring this ETF to the United States as well. We'll get it listed in the New York Stock Exchange. That's a many year out proposal. Okay, and then lastly, number three is a interesting internal swap of continents. So I am here in Mauritius right now on this call, and I will be in Mauritius through the end of the year. So my wife and daughter and I, we have moved to Mauritius as of about 10 days ago, 11 days ago. And our plan is to stay here through December 31st and then go live on the continent somewhere for a few months, maybe a few places, TBD. We haven't decided where yet. And then we'll make our way back home by April or May or June next year. Home is Seattle, Washington. And at the same time, Jumaane and his family, they're now in California. So they're there about 3, 4 days ago. They'll be there through the end of the school year. So they'll be in California through April, May, June next year. And then we'll swap back in 2026. So for the next quarter, next 2 quarters at least, I'm the African and Jumane's the American. And we're gonna leverage what we can in doing that. We're gonna take learnings from doing that, and we'll see what comes of that. Um, and with that, I will open it up to Q&A. Anybody have any questions?
Hey, sorry for being late. I was lifting weights and then I realized, oh,
Yeah, it's okay.
we have a meeting. Yeah, will you be sharing the PowerPoint with all the investors? And then so I can ask them, at least for people who haven't taken the time to do their research, some more targeted questions. And two, I think you had commented on the impact. Do you find that the impact is valuable in drawing any investors, or there's an avenue to do that?
Yeah, good. Oh, we will post the recording of this on the website probably tomorrow. The Q2 report has already been published. It was published back on the 21st of July. Most of the slides are just screenshots from that with my commentary. And yeah, we will publish the slides somewhere as well. I forget where we did that last time, but we will get that up there. And we'll take questions, throughout the year. In terms of impact, yeah, we don't talk much about impact anymore. Yes, we're still doing impact. We are. I think you missed the very opening. We exist to lower hunger and poverty. That is why the company exists. We are now struggling to measure what our impact is in terms of scale. That got described, I think, back in the Q1 report that our companies have grown so much that they're using aggregators now, and so we don't know how many farmers we're touching, how many lives we're touching. And what we found in terms of fundraising since we started this public process is that while we were a private company raising money primarily from families, the impact story was the more important lead. And now that we're talking more to public equity investors, they don't care as much, if at all. And so we tend to stress our share price and our business fundamentals and our success on the financial side. And then lovely thing is that the bigger we get and the bigger the Bizi get, the more impact is happening. It's just getting harder and harder to measure. And an open question to a collection of shareholders of a publicly listed companies: how much should we be spending trying to collect that data? Like, should we just assume it's happening because we know in the past there's been studies that show, the income of the farmers goes up and here's how their life gets better? Do we care enough to go spend $100,000 to find out exactly how many farmers we have? Or are we better off spending that $100,000 on a Bizi, growing them by, $100, $200, $300,000 of revenue and actually having more impact with that money?
Okay.
One quick comment I will say though is we are still putting in place, more and more systems to measure, environmental, social, and governance, and putting those structures in place, not just Africa Eats, but the Bizi and investments. But again, that's slightly different from impact and measuring, Luni said, number of jobs, etc. But either way, we're still putting in place those various systems that are closely related.
Thank you.
Yes, Tom? You're on mute. Tom, you're on mute. I can see your mouth moving.
I was wondering about the impact in terms of liquidity through Tuesday markets on the market. And you mentioned you're not the only market maker. You were the first, but not the only market maker. Is Stock Exchange of Mauritius now finding it's a successful model for liquidity and other guys are following you?
I don't know. The MCB announced, so let's step back. I was here in April. I did an event. Some of those slides were from this talk I did with the community about market making. And at that event, MCB raised their hand and said, "Oh yes, we're making a market for one stock now." And I didn't have a chance to follow up with them then, and I figured I'll just follow up with them when I'm living here. So again, I'm here basically a week so far. I have not had a chance to sit down with them to find out what they're doing and what their plans are. But we somehow did get a follower, and so there are at least 4 liquid companies in Mauritius now out of 60 something. And I will continue advocating to the banks and the brokers out here that they should be doing more and they should get all of the companies liquid. Of course, not all the companies go up, but they should at least get all the good companies liquid. And if they don't do it, Tuesday might do it. Is that a sufficient answer, or do you have a follow-up to that?
No, I think that's good. Thanks very much. And it's going to be a really ongoing story. I'm sure all the African exchanges will be sitting up because liquidity is their #1 challenge. And they've always sort of hid their head in the sand and say market making's too difficult. So it's really fantastic to have an actual practical example of a limited risk market making going on.
Yeah, it's definitely not difficult. Whether it's difficult in the long run to make money, that's an open question, but it's not difficult to actually do market making. It's rather trivial. It takes up almost none of my time. We don't even have a business person on the team yet. The person who actually does the work is the head software developer. He's an entrepreneur, he's a businessman, but like he has no training in this work. I taught him what to do and he just gets it done.
And Looney, how involved are you in the companies now? Is it less so than maybe a year ago?
In the Bizi?
Yes.
Oh no, still the same. Jumaane and Lily and I check in with the Bizi. I'd say it's pretty much same frequency as we've been doing for the past 5 years.
Okay.
Part of me being here was to be on a better time zone so that I actually overlap their working hours. And so my expectation is that I'll actually be talking to them more in the next 5 months than I have in the previous 5 months. Right, the time zone in Seattle is pretty much as bad as you can get. I think Hawaii might be slightly worse, but I only overlap with the waking hours of Africa in the morning in Seattle and like 9, 10, and 10 o'clock at night. And so I'm very much looking forward. I'm an hour ahead of East Africa now. So I'm
Sure.
very much looking forward to the fact that I can talk to them anytime during the day now.
Yeah, I was looking at this company. I'm going to like an alumni event, and it made me think of Africa Eats. So there's this company called Atlas Holdings, and I think they're based out of Connecticut, but they invest in kind of not really Berkshire-like, but diversified, so manufacturing. I think there's some food companies in there, and it made me kind of come up with the question of like, what might these businesses and look like, because here, well, still, I guess you've mentioned that in the US, we had the entire process of cold storage and everything, but I mean, the US is still incredibly young. But when I looked at those companies, seeing how they're still growing, they're still being built out, it made me wonder what this might look like for, East and South Africa. And I think there's one or two in West Africa.
Do note like one change of the Bizi in the last year or 18 months versus previous years is some of them are now big enough they're operating in more than one country. And so Swahili Honey now sells more honey in Kenya than they sold in Tanzania when I met them. And for the first few years after we first wrote the first check to them. East Africa Foods is expanding over to Kenya as well. TRUK is basically operating in like 5 countries. It's just based in Rwanda. And even when they're, you think Elite Meat is selling meat in like 6 or 7 countries in Africa, but it's 6 or 7 out of 55, or it's 6 or 7 out of 25 well-run growing economies. Like the growth opportunity for these companies is still humongous. It's not measured in doubling or 10xing. Literally the opportunity for many of these companies is 1,000-fold, or more. And so it will come a day, I don't know when, I don't know what decade, but there will come a day when a large number of Bizi are growing at 5 to 10% instead of 50 to 100%. It's inevitable. It has to be an S curve at some point. But it's not 2025 and it's not 2027 and it's probably not 2030. Um, and uh, and so we're a long, long way before the portfolio of Africa Eats looks like the portfolio of Berkshire Hathaway or any of its copycats in the States, where 4% growth of Duracell batteries is a good year. And 3% growth of Fruit of the Loom is a good year. Like yeah, 3% to us is a flat thing, and that's a failing Bizi.
Yeah.
All right. Anybody else have a question? We got
One
time
more.
for a few.
Sorry, one more. So as these
Okay.
companies grow, like we have our very established businesses here, like some of the most boring businesses, right? Like waste management or Clorox. And
Yeah.
does it, like I've noticed you haven't commented very much on like the actual operations or the people in these businesses. So is is all their hiring done internally, like they know what they need and they just grow and you're relatively involved, or is
We
it?
help when they ask us to help. So most commonly, Jumaane, describe how often we've helped with finance people.
Yeah, happy to. So we, as Looney said, we generally, one of the areas that has popped up is finance. So what we've done is we've created, um, uh, I guess you can call it a scoring matrix that looks at each of the levels for every.
So you're cutting out there.
Yeah,
You said
Jumaane,
you
your
looked
your
at
your voice
something,
cut out.
sounded like a matrix or something.
Yeah, sure. Yeah. So we put together a matrix structure that looks across all the various aspects of the company. And what we do is based on the size of the company as it's growing, we anticipate what challenges are, and then we then help put in place stronger measures. So, as a specific example of that, as a company, for example, hits $1 million in revenue, them assess the quality of their finance team to make sure that they have sufficient staff who can take the company from $1 million in revenue to $5 million in revenue. We help you with internal controls and help you improve those various aspects. We look at your auditor. We help you upgrade the auditor that you're working with to a global tier 2 auditor. So what we do is we have these measures that once you hit certain, we then would prompt, ask questions, facilitate, and help those companies make that transition. Sometimes, like in the case of a company hit $1 million in revenue, they may, for a finance manager that can manage it. We prefer to manage a $5 to $10 million company, so we'll facilitate the process of them perhaps paying the cost for the first few months, so they can see the value of having someone of that quality and come on board before they take over payments for that finance manager. So those are some tangible examples of how we go about helping the companies in that aspect.
Okay, and sorry, I didn't catch the end there. So you said you're working a finance manager?
We have, yeah, sorry he's breaking up here, but it's odd because I'm in Africa. But yeah, we have at times, multiple times, helped recruit finance people or even ops people for these companies as they grow. We've vetted the candidates. Um, and occasionally, again, I mentioned this earlier about in terms of like the gathering is spent off our expense sheet. We have multiple times paid for the first few months' salary of this new hire when the company couldn't quite afford that level of talent, but could really use that level of talent and would need that level of talent in a few months. We'll cover that gap of expenses for a few months.
Sure.
Yeah, Luni, can I just add a word?
Yes.
Yeah, good morning, everybody. So Shamin Sukia, Managing Director, Operation Capital, advisor to listing sponsor to Africa Eats and the two companies. So Luni, when you spoke about the ETF, etc., and you know all the things that are happening in Mauritius and then in Nairobi, and then beyond that, maybe in the future, we just have to bear in mind, you know, the different markets in which all those companies will operate and listed, and of course ensure that there is coherence in communications across all those markets, just to ensure that investors are not penalized in terms of information and not being available, you know, to everybody at the same time. I just wanted to share this across. I know you know very well about this, just for all those present, you know, on the call today. So that's a very important thing, and this ensures that trust is being, you know, put into the minds of all the investors who are willing to, you know, accede to those markets. It's just a
Yeah.
word from me. I just wanted to say this. Thank you.
Thank you for the advice. This is our investment advisor here in Mauritius. Um, we strive to follow the norms of New York when we're doing communications. So just note, it's not normal for Mauritian companies to have quarterly earnings calls. We're doing that because that's a norm in New York. It's a best practice in the world. Um, the norm in Mauritius is three quarterly reports a year, not four. And there's simply the financial reports with no commentary around them or very minimal commentary. Our quarterly reports are not too dissimilar from our annual report, just not quite as flashy, but a lot of text in there to describe what's going on, a lot of narrative. We're doing that because that's the norm in New York and best practice of the world. And so we will be continuing as we expand our capital market activities beyond Mauritius into Nairobi and elsewhere to bring these best practices to those markets, whether or not that's the norm there or not. So that is our goal here. With that, we are at time. We're just about at time. So if I go back to share screen real quick to wrap up. Do note, we talk about our secrets and how Africa Eats works. Those secrets are published in a book. It's called Berkshire Africa. Jumaane and I are working on an update to this book. It should be out in the next few months. The update will describe, whereas the first edition of this book describes our theory of the capital markets, the new version of this book describes the experience of opening up the capital markets. We will continue to revise this book every year or two as we learn more. And then this is the current map. And if you missed the announcement earlier this year, AGRI is back from oblivion, so it got added to this map. And hopefully by Q3 there'll be a new update, little hint on things that will be happening in the next quarter. And with that, we will see you in about 3 months or 2.5 months for the next earnings call. Thank you all for attending.
And Jumaane, which part of California are you in? Are you in SF or in Los Angeles? And I just shared a link to Atlas Holdings, and I think it's in Greenwich.